The Federal Reserve is the central bank of the United States and is responsible for implementing monetary policy, regulating banks, and ensuring the stability of the financial system. Despite its important role, there are many misconceptions and misunderstandings about the Federal Reserve, including some of its biggest secrets. In this essay, we will reveal some of the biggest secrets of the Federal Reserve and examine their implications for the U.S. economy. So in this video, we are going to discuss Federal Reserve Biggest Secret Revealed. The video is going to be amazing. Make sure to stick till the end. Now before we get into this video, make sure to hit that subscribe button and leave a comment below saying I subscribed. I will try my best to reply to as many comments as possible. The biggest secret of the Federal Reserve. The Federal Reserve, commonly known as the Fed, is the central bank of the United States. It was established in 1913 and is responsible for implementing monetary policy, regulating financial institutions, and maintaining the stability of the financial system. Despite its importance to the U.S. economy, the Fed has been shrouded in secrecy and mystery for many years. In this video, we will explore the biggest secret of the Federal Reserve and the implications of this secret for the U.S. economy. The biggest secret of the Federal Reserve is that it has the power to create money out of thin air. This power is known as the ability to create money through fractional reserve banking. Fractional reserve banking is a banking system where banks only hold a fraction of the deposits made by their customers in reserve and loan out the rest. This system allows banks to create money by lending out more than they have in reserves. The Federal Reserve has the power to control the money supply by regulating the amount of reserves that banks are required to hold. When the Fed increases the reserve requirements, banks are forced to hold more reserves and are therefore able to lend out less money. Conversely, when the Fed decreases the reserve requirements, banks are able to lend out more money, which leads to an increase in the money supply. The ability of the Federal Reserve to create money out of thin air has significant implications for the U.S. economy. First, it allows the Fed to inject liquidity into the financial system during times of crisis. For example, during the 2008 financial crisis, the Fed created trillions of dollars in new money to bail out financial institutions and stimulate the economy. Second, the power of the Fed to create money can lead to inflation. When the money supply increases faster than the supply of goods and services, the result is inflation. This is because there is more money chasing the same amount of goods and services, which drives up prices. Secret 1. The Federal Reserve is not actually part of the government. One of the biggest secrets of the Federal Reserve is that it is not actually part of the government. While it was created by an act of Congress in 1913, it operates as an independent entity and is not subject to direct political control. This means that the Federal Reserve is not accountable to the American people in the same way that other government agencies are. Implications. The independence of the Federal Reserve is designed to insulate it from political pressures, which can be beneficial in terms of making objective decisions about monetary policy. However, it also means that the Federal Reserve is not directly accountable to the American people, which can raise concerns about democratic legitimacy and transparency. Secret 2. The Federal Reserve can create money out of thin air. Another big secret of the Federal Reserve is that it has the power to create money out of thin air. When the Federal Reserve wants to increase the money supply, it can simply create new reserves and use them to purchase assets, such as government bonds or mortgage-backed securities. This process is known as quantitative easing. Implications. The ability of the Federal Reserve to create money out of thin air has important implications for the U.S. economy. While it can be used to stimulate economic growth and combat recessions, it can also lead to inflation and undermine the value of the U.S. dollar. Secret 3. The Federal Reserve bailed out the banks during the 2008 financial crisis. During the 2008 financial crisis, the Federal Reserve provided emergency loans and other forms of support to many of the largest banks in the U.S. This included providing low-interest loans, purchasing toxic assets, and injecting capital into struggling institutions. These actions were not widely publicized at the time and were only revealed later through Freedom of Information Act requests. Implications. The actions of the Federal Reserve during the 2008 financial crisis have been controversial, with some arguing that they saved the U.S. financial system from collapse, while others argue that they rewarded reckless behavior by the banks. The lack of transparency and public scrutiny around these actions has also raised concerns about democratic accountability. Secret 4. The Federal Reserve sets interest rates based on its own projections of the economy. The Federal Reserve sets interest rates based on its own projections of the U.S. economy. This includes factors such as inflation, employment, and economic growth. While it takes into account the views of other economists and policymakers, ultimately the decision-making process is driven by the Federal Reserve's own models and forecasts. Implications. The fact that the Federal Reserve sets interest rates based on its own projections of the economy means that its decisions are not always aligned with the views of other policymakers or the public. This can lead to tensions between the Federal Reserve and other parts of the government, as well as between the Federal Reserve and the public. Secret 5. The Federal Reserve has a history of manipulating interest rates and the stock market. There is evidence to suggest that the Federal Reserve has a history of manipulating interest rates and the stock market. This includes actions such as suppressing interest rates during times of crisis, pumping liquidity into the markets to stimulate economic growth, and communicating its intentions to investors in order to influence market behavior. The ability of the Federal Reserve to manipulate interest rates and the stock market has important implications for the U.S. economy, while it can be used to stimulate economic growth and stabilize. Implications for the U.S. economy. The ability of the Federal Reserve to create money out of thin air has significant implications for the U.S. economy. First, it gives the Fed a significant amount of power to influence the economy. By controlling the money supply, the Fed can stimulate or slow down economic growth, depending on the needs of the economy. Second, the power of the Fed to create money can lead to inflation. While some level of inflation is necessary for a healthy economy, too much inflation can be harmful. High inflation can erode the value of people's savings and lead to a decrease in purchasing power. This can be particularly harmful to those on fixed incomes, such as retirees. Third, the power of the Fed to create money can also lead to asset bubbles. When banks have more money to lend out, they are more likely to make risky loans and invest in risky assets. This can lead to a bubble in certain asset classes, such as housing or stocks, which can burst and cause a financial crisis. Fourth, the power of the Fed to create money has implications for the national debt. The Fed can create money to buy government bonds, which allows the government to finance its debt at lower interest rates. However, this can also lead to an increase in the money supply, which can lead to inflation. Fifth, the power of the Fed to create money has implications for international trade. When the Fed creates new money, it can lead to a decrease in the value of the U.S. Let us know your opinion in the comments section below. This was all for today. Hope you liked the video. Subscribe to our channel and stay tuned for more interesting videos. Stay safe, and we will be back soon with another video.